For the longest time, Japan's property market was, well, kind of boring, but in a good way. It was a safe bet, right? Steady, predictable growth. But that's all changing. The script has totally flipped. It feels like the market is telling two completely different stories at once, and we're here to piece this whole puzzle together. So let's get right to it. The big question on everyone's mind, after all these years of stability, is Japan's property boom about to crack? And the answer, well, it's not a simple yes or no. The truth is actually way more interesting, and it points to this massive shift that's been happening, just beneath the surface.
Here's the bottom line. The number one thing you need to take away from this, that old idea that you could just throw a dart at a map of Japan, invest there, and get a decent return, that's over. Done. The market is splitting apart, creating clear winners and losers. We're stepping into a brand new era where location, location, location isn't just a saying, it's everything.
All right, so let's dig into that. Just how deep does this divide actually go? To really get what's going on, we've got to look at these huge economic forces that are literally pulling the market in opposite directions. And the best way to picture this is what economists are calling a K-shaped market. Just think about the letter K. You've got one line shooting straight up, that's your booming cities. And then you've got the other line trending down, those are the regions in decline. They start from the same place but head in totally different directions. And look, this K-shape isn't just some abstract idea. You can see it happening in real time. On one hand, you've got these major city hubs just buzzing with growth. But on the other, you have these regional areas that are really starting to slow down, to stagnate. Their paths are splitting apart, and it's happening fast.
And we've got the hard data to prove it. This chart shows the Land Price Diffusion Index. Now, all that really means is it's a measure of how optimistic or pessimistic people are feeling about the market. And look at this. The Kinki region where Osaka is flying high at plus 21. Tokyo's Kanto region isn't far behind. But then, you look at the other end of the spectrum. Hokkaido and Tohoku are way down in negative territory, at minus 10.4. I mean, that's not just a gap, that's a chasm opening up right in the middle of the market.
So, what's causing this massive split? A huge part of the answer, a really big piece of the puzzle, is what's happening in the new construction market. It's totally caught in this weird squeeze between prices going up and demand going down. And this paradox is sending ripples through the whole economy. Yeah, this quote really nails it. Prices are rising, but transaction volumes are falling. Just let that sink in for a second. How is that even possible? It feels like it breaks the first rule of economics, supply and demand. But believe it or not, that is exactly what's going on. And check out the numbers that show this paradox in black and white. For brand new condos, the price index is through the roof at plus 24. But the transaction index, the number of actual sales happening, is down at minus 10.4. That tells you everything. The high prices aren't because everyone wants to buy. They're because of problems on the supply side. Okay, so here's how it unfolds. First, construction costs just go through the roof. That obviously leads to higher property prices. But, and this is the key part, people's wages just haven't kept up. So what happens? Buyers start to hesitate. They can't afford it. And the result is demand falls off a cliff, even while the sticker prices keep going up. It's a classic case of stagflation, playing out right in the housing market. So with brand new places getting way too expensive for the average person, where do buyers go? Well, they're forced to look elsewhere, and that's creating a whole new wave of activity in a totally different part of the market, secondhand homes. Exactly. All those buyers who got priced out of the market for new condos are now flooding into the market for existing ones. And even though the whole market is kind of slowing down, this secondhand sector is turning out to be way, way more resilient. And this one number really tells the whole story. Minus 1.4. That's it. The sales volume for used condos has barely dipped. Now, compare that to the massive double-digit drops we're seeing for new builds. It's crystal clear where the action is right now. But the shift isn't just about people buying used instead of new. There's another really interesting thing happening. In this kind of uncertain market, another sector is popping up as a surprising safe haven for investors, and that's the rental market. So while the for-sale market is struggling to get deals done, the rental market is absolutely thriving. The Rent Diffusion Index is sitting at a super strong plus 13.5. That's a huge signal of an upward trend and just overall great health in that part of the market. So why are rentals doing so well? Well, a few big reasons.
First, landlords are actually able to pass their higher costs on to tenants in the form of higher rent. For an investor, that means stable cash flow. It also makes rental properties a fantastic hedge against inflation. And because of all this, foreign investors are really starting to look at Japan's rental market as a safe place to park their money.
Okay, so you've seen the K-shaped split, the new build squeeze, and the shift to secondhand and rentals. The big question now is, how do you actually navigate this? The old rules just don't work anymore. Investors need a whole new playbook for 2026 and beyond. And the new winning strategy really boils down to two words: selection and concentration. You have to forget about treating Japan as one giant uniform market. It's not. The smart money is now getting super focused, targeting specific cities. We're talking Tokyo, Osaka, Fukuoka, places that have real, proven growth behind them.
And this also means a huge pivot in strategy. Investors are moving away from what's called greenfield development, building something brand new from an empty lot. Instead, they're shifting to brownfield strategies. That just means taking an existing building and adding value to it through renovations. Honestly, with the cost of new construction being so insane, the risk versus reward for fixing up an older place just makes a lot more sense right now.
Which brings us to a really powerful final way to think about all this. Japan's real estate market isn't a single flat landscape anymore. It's not. What it's becoming is a series of growing points. Think of them like islands of growth that are surrounded by these huge, shrinking plains of stagnation.
So yeah, the era of easy, coast-to-coast growth is gone. Success now is all about being precise, being strategic, and really understanding these deep shifts we've talked about. So that leaves one final question for you. In this new market of points and plains, where are you going to choose to stand?